All right, all right. Woo! Hell of a day. Hell of a day. Looked like we might try to hold on for a minute earlier in the day, and then it just could not. Buyers capitulated. Okay. What is the words that we live by? Be water, my friends. Let's be ready to adapt. I love it. We got a good crew. Like last week we were short. This week we got everybody. Everybody good. Everybody good is here. I noticed that. It's good to see you all. Welcome to the Market Watch Group weekly market wrap. Okay. Let's see what we initially assess the damage as, right? Sometimes we'll take an initial sweep of it and be like, okay. And then what we see on Sunday, we're like, oh man. Sometimes it's better, sometimes it's worse. Hi Perry, good to see you. Hi Bob. Hi everybody else. Let's dive in. Here are the disclaimers, as always. Be careful out there. Here's the agenda. How are you feeling? We haven't done that. We haven't done our little check-in. Here for a little bit. Let's ask you, how are you feeling? How are you trading? How are you feeling? How are you trading? Shocked at the drop? Yeah, we kind of got hit, didn't we? And well, let's assess it. What's our agenda? Today's market analysis. What happened? We're down. Paying press said paying for my lack of participation last week. Trading's been rough. It's been a tough one. We'll revisit our posture. I would expect, of course, that we're going to see more decline. The question is by how much as we revisit the posture. Steven says feeling good. Trade some good, some not so good. Yeah, okay. We can live with that. Right? We're not like the expectation's not like, oh, I should have you reporting back of all your profits. No, in a market like this, that's exactly what I would expect. Little up, little down. Maybe holding something, maybe on a hedge. Overall risk levels dialed back a little bit. That makes sense. Huh? That's a great plan. Okay. If you're carrying trades over the weekend, that'll be interesting. If you're carrying them over the weekend. What are we looking at next week? Shopping list? Yeah, I don't know. I think there's a good chance. That yeah, I think there's a good chance that things drop pretty good. Let's see what happens. Okay. Let's start here. Okay. Well, let's take a look. We started off down. We were thinking maybe it could try. No, it fell. It broke the range to the downside. Little flag. This is not on our market posture. But I want you to look at the dollar here relative to back here. This was early August. Remember what happened from early August into October. So yeah, there's some concerns without a doubt. there are some current concerns. Let's take a look at the SPY. And here's our opening range. What happened? 1, 2, 3, 4. Opening range. Tested, came back, held, dropped, and then what? Broke the bottom of the range. Up to lower high, and we fall. Up here, lower high, and we fall. Up here, we're seeing a little bit of late session stability, but not too much. Press said, if I'm down significantly, but my options don't expire till May 17th, do I sit out? Yeah, that's a tough one, right? If you hit to that spot where you're down 80, 90%, you're down to the last like 10%, and you look at it and you think it could come back. And I have until May. Yes. If you're at 20, 25%, that's still a good chunk. And if you're not like pretty convinced, then you may want to just get out of it what you can get out of it. Yeah, that's a tough one for sure. There are plenty of times where I've like gotten to the point where I've lost it, and you know, I'm down 90%, and I'm like, yeah, there's nothing I can do. So I sit on it. Most of the time, what happens? I lose the other 10. Right? Sometimes though, catch one. And all of a sudden, you're like, okay. Yeah, I don't know. That's a tough one. Okay, what do we know here? It's going to be above average volume. We're at average now with 37 minutes. Yeah, we're definitely going to hit quite a bit. I would say we're going to hit up towards like 85 million. Pretty similar to this. 82 and a half. Yeah, I can see that happening again. Most definitely. What else? Yeah, okay. What do I know though? I know that we're holding the 50 still. We're still holding the 50-day. And overall, from where we were, let's do an exact retracement calculation. And we'll see what that does. $524. Where'd my calculator go? Right there. Are lots of people panicking? I don't think so. I don't feel like this looks like panic. 524.61 minus 509.87. 1474 divided by 509. Nope. 524.61. We are 2.8% off the highs. 2.8% off the highs. I mean, is that even is that even a big consolidation? It's not too bad at all. Thank you, Steven. He's like, not too bad. It's 2%. It's not even 3%. That's not like, oh no. I mean, is there some concern? Yeah, we've seen it slow down in here. We talked about the slowdown. We saw our posture drop and we're like, oh, it's okay. So what's going to happen this time? Let's talk about that. Long-term trend, nothing. It's going to stay the same. Nothing, right? This looks like a flag for now. Now, remember what I told you, though. We're likening this to early August. I said early August. And where's early August? Right through here. So in early August, we got this like, maybe it's going to survive. And then what? It didn't. Right now, what do we have? Sorry, that's the wrong year. I'm like, wait, no. Early August is here. And it dropped, went up, and then dropped hard again. Yeah. Look, if we get another negative week next week, and then we get two like this, and then that starts to roll over, yeah, we'll definitely be like, oh, shit, watch out. Now we are thinking correction. So then we would say, well, what would our correction numbers be? 524. 61 times 0.9. Not 99, just 9. 472.15. That's down here. 472. That's right here. You'll notice that's close. It's a little below the red one, but a little above the black one. So, maybe our trend is shifting. We're not sure yet. Long-term trends staying the same. Short-term score, is it dropping this week? Maybe. So here is where we were. 1, 2, 3, 4, 5. We were here. We thought it looks like it's trying to turn, and it didn't. Dropped a little lower still. Yes, I will drop mine by a quarter of a point. I'm pretty sure. That takes me back to a 1.5. Remember, one of the things I said that I'm looking for is this may not reverse trend. It may just slow down to a slower trend, a less steep trend, right? So that's what I'm going to be looking for, a less steep trend. Okay, let's keep going. What's next? Volume. I have a bad feeling volume's coming down. Yeah. Seasonal, April's a good time. It should be up seasonally. I agree. We're hopefully we don't get let down, but Steven says once again, when the dust settles, we're going to be okay. Agreed. Why? Because we're fundamentally in a good place. The economy is strong. Is it going to get shook the longer we have? Well, I'll tell you right now, the thing that's killing us, oil is killing us. Oil first, continuing to be strong. Materials second, those are also strong. The dollar third. It's putting pressures on. There's inflationary pressures. We're going to go talk about that here in just a second. But volume wise, what do we get this week? This is a sell-off day, and this is going to be a sell-off day. I'm pretty sure I'm going to probably go negative. At least, the very, very least, it's going to go to 0. But there's a good chance we do see that go negative. Now, let's go back in time. Let's go back in time. I want you to notice, right? The volume here, we're at 5.5, and then the volume drops to 0.25, then the volume drops to 0, and then the volume dropped like that. In this August, early August to mid-August, when things drop from 4.75 to 2.25, right? This wasn't bad. We're like, yeah, we don't love it, but it's not great. And then it dropped again. That's a little what we might be looking for, and then it just got worse. And that's what we're like, okay, so let's see if we get the same kind of a thing. As of now, let's see. I definitely think I know we're going to lose at least a quarter, possibly a half. Let me know your thoughts on that. So as of now, we're losing at least a half, if not 3/4 on the full score. Sector rotation, I think it's going to hold up. I don't think there's enough there, but maybe I'm wrong. I think it's going to hold up at a 0.5. Major market also, I think, is going to hold up. They're both at 0.5s right now. I think they're both going to still show more favorable than, nope, that's wrong. Major market might drop to 0.5. Might drop. I take that back. It might drop. So we're going to, we're going to be in an interesting place. I would say we're going to be down half to 3/4, maybe. So 3/4 to 1, which makes it the second drop in a row. Let's see what we think from the VIX. VIX is going to lose a quarter as well. I think we're going to lose a full point. We're not stoked about that. We're not stoked at all. Here's the VIX. It's a higher low. That was our concern, that we're going to break out. We held at this level, meaning it closed there. Didn't close there back then, it closed back down here. This is concerning. Does anyone still have at least some pieces of hedges on? I hope so. You can certainly see things have, yeah, that's not great. That's not great for us. So I'm gonna say that's gonna drop. Yeah, that's at least a quarter. I think we could end up possibly in the fours. And it's a little bit of a wallop. We don't love to see that. Yeah, exciting. Exciting times. Let's go see what else is happening. So big bank earnings underwhelmed. They weren't bad earnings. They underwhelmed because they're lowering guidance. So yeah, let's see. Anything else going on? Maybe. Let's take a look. Consumers are getting frustrated with stalling inflation. Well, stop buying so much stuff. If we keep buying it, it keeps going up. That's how supply and demand works. Using AI to complete your taxes, proceed with caution. Yeah, no kidding. I love AI, but it's not there yet without some serious checking through things. Last minute tax tips. What to know before filing an extension. Here's what I know. I filed mine today. So what? Um, yeah, that's it for me for the news. Let's go to the economic calendar. We just wrapped up here. Consumer sentiment came back a little lower than expected. So we're starting to see some chinks in the armor. Empire State Manufacturing is expected to be down, but better than before. Sales are supposed to come down. That would be great. That would be great. Yeah. 0.3. I think even 0.1 or 2 would be better. The market would be like, oh, okay, maybe. Retail minus autos is actually supposed to tick up. Here's what would be great. 0.3 here, lower than even expected. 0.3 here, same as before, down a little bit. Helpful. Housing inventories down a little bit. That's fine. That's fine. Powell speaks on the Tuesday, Bay's book on Wednesday, Mester on Wednesday as well. Thursday, nothing big. Oh, look who's speaking on Friday. Goolsby, the great, the hallowed Austin Goolsby. Yeah. So now what? Let's go look at our Fed watch real quickly here. It really is not like catastrophic. I feel like we're going to stabilize here. I don't feel like the urgency yet. I mean, certainly there's concern. We're not ignorant to that. But panic or anything worse? Nah. Okay, nothing in May. 3-1 against in June. 1-1 in July. And I think if we've seen anything, the market's hopefulness, its hopeful bias, absolutely plays a role here. I would say I'm a victim of it. I'm like, oh, I hope it does. Let's see. Oh, come on. God, I'll tell you, we haven't had any surprises in the Fed for so long. My old friend Alan Greenspan should hold a seminar to educate how Fed should handle themselves. Man is a legend. September is now the first time our probability shows better than not for a cut. That only leaves us with 3 meetings. My understanding is the consensus now has no call for 3 cuts, but only 2. Okay, as long as we get something. We may grind it out this summer. Here's what I'm going to tell you. If we're going to grind it out, then make sure you are comfortable with butterfly spreads and calendar spreads. And if you're not, we just barely finished up talking about them. Go watch the recordings. We're about to talk about, we're going to do a working session on diagonal spreads on Tuesday. But on Thursday, we're going to start getting into those butterflies. And that is a great strategy for the type of market we're going into, especially if we are going to see the market grind it out a little bit sideways. What's happening today? Oh, look at Apple trying to hold up. PGR, a little bit of insurance trying to hold up. Aflac, right? Everything else, Walmart, everything else is getting bashed. Chips are pretty bad today. Meta's pretty bad today. Apple's my hero today. Yeah. Oh, it's a red day. It's a bloody day. Is it a panic day? Nah. How is it that I am more accurate in the forecast of Fed change rates than experts? Because, Press, you're working very hard, and I hope that maybe partially due to your participation here on not trading with a bias, right? You're just like, look, I've traded with the bias before. I don't like it. So have I. I've traded with the bias. I still do sometimes. And the second I recognize it, I try not to. And I just try to recognize. But yeah, interesting statistic. How about this for what? They asked a group of retail traders. If you're following a set of rules, you take 2 trades, they go wrong in a row. Will you take the third trade? 2 trades. Took one, went wrong. Took one, went wrong. Third trade. Do you take it? Okay. Retail traders. What percent? This is open. This is a makeshift poll. What percent of people in this survey do you think said, yes, I'll take the third trade? What percentage of respondents said, yes, I'll take the third trade? Retail traders. Same day, Bob. Yeah, you decide. You decide. Same day, different day. Took one, went wrong. Took one, went wrong. You have a setup. Do you take the third trade? It's a tough one, right? Press said 70%. Oh, Press. Knock the 0 off. 7 or 8%. 7 or 8. Look, if I'm right 50% of the time, if I'm right 50% of the time, 0.5. 0.5. Every 4 trades, theoretically, I'm going to have 2 go wrong in a row. Every 4 trades, I will have 2 go wrong in a row, statistically. How about 3 in a row? Whoops, that's wrong. Let me start over. I want you to take the third trade. That's the first thing. Your rules should be strong enough. 12.5. So if I have a series of 10 trades, there is a strong probability that there will be 3 in a row that go wrong. Strong probability. 3 in a row. If I have 3 in a row, should I take the 4th one? Well, hell yes. Why? Because it's a positive expectancy. because not taking the trade is a direct result of a concept called gambler's fallacy. I used to teach a live class, and we would do a trading simulation. I'd have a bag of marbles, okay? 30 green marbles, 20 red marbles. Reverse that. 30 red marbles, 20 green marbles. Red was losers, green was winners. So this is a system that you would expect to be wrong 40% of the time. But in the spreadsheet we had built on everybody's laptop that they used for the class, we calculated a win at 2-1 and a loss at you lose what you bet. So I would say, okay, put your bet in, right? And everyone would put how much they want to bet. And I'd pull a marble out. Red, you lost, you lose your bet. Green, you win, you get double. And then I put the marble back in the bag. So it's always 60-40. So it's a 60% wrong, 40% wrong, right, but 2-1 reward to risk ratio. That is a system with a positive expectancy, 20%. However, guess what people would do? If it had 3 losers in a row, they'd lower their bet. Or raise their bet, I mean. Oh, it's had 3 losers. I'm going to raise my bet because they think a winners do. They raise their bet and then it's wrong again. Boom, you just took a bigger loss. Right? It creates this inconsistency, this gambler's fallacy, that where it's like, oh, well, we've had 5 losers in a row. So here's a funny story. I was actually teaching a large risk management and trading psychology workshop in all places, Las Vegas. The irony. So we're at the Rio. Can't sleep. I never can sleep, man. I'd be on like 3 hours sleep every time I teach one. I can't sleep, so I go walk around the casino. And I stopped and I watched the not the blackjack, the roulette table. And I was watching, and inevitably you always see someone, they bet on red, and then black comes, they bet on red, right? And I was watching it, and I just kind of leaned over to the dealer and I said, hey, what's the most number of times you've seen one or the other colors hit in a row? And it was funny because, like, I think he was wondering if I was going to play. It was late. Anyway, I think he understood where my question was coming from because he laughed a little bit. He said, I've seen 22. 22. And he said, but I had somebody who told me about a time that they had 30 something, 33, I don't know. Black, 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 black. And what's everybody thinking? Oh, we're due. Really? What are the odds? About 48%, because you have the double zero and the zero, the 2 greens, right? So it's never 50-50. That's how the table gets their odds, their edge. So, yeah, right? You think 48%. What are the odds? What are the odds? Well, we can figure it out. You keep multiplying out, and it will tell you that, oh, man, you know what? That's only going to happen every 1,000 spins, every 10,000 spins, every 100,000 spins. Well, that table is spinning. Spin, 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 spin. Probabilities are happening like that, right? So, yeah, we want to make sure that we're assessing that concept of probability and the impact that it has. We should have a system where our rules are strong. If I have 5 losers in a row, I'm taking trade 6. Now, my trigger point is 7. At 7, I'm going to stop and be like, okay, before I take trade 8, I'm going to evaluate every single trade. I'm going to that just went wrong. I'm going to look at my market posture. I'm just going to be like, what am I doing here? So certainly we're not going to just blindly keep throwing money at it. But you've worked hard for these rules. We can't just be like, oh, you know what? This time I'm not going to. And the next time I am. Oh, well, that sounds like it's just kind of like you don't have rules. You're just randomly deciding sometimes yes and sometimes no. The second we start doing that, our numbers are no longer effective. It's no longer strong data. Strong data relies on consistency of execution. Got to execute consistently. So back to your original question, Press. If you ask institutions the same question, so when you say, hey, all these I mean, you remember what we said about UBS Bank? They said 2.75% increase this year. We may get a half. It's like you're an enormous bank. That's the best you got. I'm telling you, man. I don't trust them. They asked the institutions what percent of institutional traders would take the third trade. 7% for retail, 15% for institutional. So they're marginally better, but none of it's good enough. That's the bottom line. That's not a good enough. If you don't trust your rules enough to take the third trade, then your rules aren't strong enough. Go make your rules stronger. That's what I say. Yeah. But to answer your question, I don't trust the institutions hardly at all, Press. I trust your assessment more than theirs because, as I said, our objective is to God, what am I doing here with this calculator? Maintain objectivity. Be clear about what we're seeing and what it means. We're not here we check our biases. Make sure. Am I? Right? I hope you hear it. I ask you, am I? Do you feel like do I need to be a little more open? Do I need, I want to ask those questions and make sure that we're open to it. Okay. It's a great time to have that conversation. I can tell you that. Let's whip through our watch list and just see what we think is going to hold up going into next week. Is there still going to be opportunities? Apple looks great. If you missed Apple on this one, I will absolutely trade the next pullback. I would look at halfway on this candle right here. So if it goes up, let's say it touches 180 and then comes back down right there around 172. We need Apple. We want Apple. We need Apple. If Apple's participating, the odds of bullishness go up significantly. Market's been struggling while Apple's been struggling. So we'd love to see this help. AIG, ooh, it's getting, see, that's tough. Remember we said we have to have a sense as we're going through these, when does a pullback become a sell-off? And I think that the 50 days is a pretty easy marker. If it crosses, if it crosses, oh, Friday, you guys, my goodness. If it crosses through the 50, yeah, I think it's more inclined to say that it's more of a sell-off than a pullback at that point. AMD is no good. What do I have? If I'm thinking chips, I've got three in chips, and we'll see if any of those actually hold up. Number 1, NVIDIA. Number 2, TSM. Number 3, Micron. Okay. Amazon looks fine. Actually, I would love if Amazon would pull back a little bit more than one of these little, like, I'd like to see it pull all the way back down here towards 180. It gets back to the 50, back to this, and resets for another trade. Something like this here. You can see sideways, 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 sideways. And then it got one little move, and then it pulls back, and then boom, trade, boom, trade. 2 good ones in a row. I would love to see that, and I absolutely think that's viable. AXP, viable? It could give a signal on Friday. The problem is this. Earnings are next Friday before market. So if you get a signal tomorrow, you could trade this for maybe 3 days of pre-market action, and then that's all. Right? And then that's all. Boeing, garbage. We've said it's been garbage the whole time, but we're going to keep watching it. It's an experiment in watching it. I think BAC actually looks fine. If it held, turned, but you have earnings. So coming into earnings season is definitely a bit problematic. BLDR, I don't like it unless it breaks back up. Citi, let's see what happens. It's holding this support level right here. I think that a trade is viable coming out of this. That was a little bit interesting, but I still think that there's prospects here. Caterpillar, love it. Love it. I'll even move this right here. You want to come down and meet me at 360? I'll see you at 360, Caterpillar. We'll see you soon. Great to see a strong one like Caterpillar staying up there. Chipotle, well, we're just watching as we get closer to the split. Capital One, yes. Close. I would absolutely think about adding a trade on this on Monday if the market shows that it's holding. I definitely think that prospects of alerts are in place. Oil. Oh yeah, finally. Is this I didn't look at the crude prices. Okay, so oil this morning was up. It's giving it all back. We'd love to see that come back down. So that looks nice. Costco, I'm not convinced yet. If it gets a little bit higher, then I'd be like, okay, the buyers seem to have done something. Now I just need to wait for the pullback. CrowdStrike sideways, nothing for us here. Delta sideways, nothing for us yet. DHI. It's below the 50. It's kind of gotten beat up and it is close to earnings. Diamonds down. Ford. Oh, I started the day with good Ford prospects in my mind. I'm ending the day a little bit less, right? But it's right on top. So let's say we doji on Monday, and then we get a turn candle like this right here, doji, and it starts to turn. As of now, I'll still take it. I'll still take it. I'll take half off there for close, just under 14, and then I'll look to get the rest at 14 and a half. And I think that'd be an amazing trade. Vol is high, right? The vol is high. So if you take a trade on something like that, be careful how you take the trade. Fastenal, no deal. Going to get booted from the watch list. GBTC, Bitcoin down 5% today. GE, I'm looking for something on GE Aerospace. I'm a fan. Gold, okay, giving back a little. It's nice. We'd like to see that relax. Google, I love Google. I would love to see Google set up 2-3 days into next week. There could be a trade there. IBM is going to get kicked off the list. IWM, there's concern right there. We didn't hold the 50 this time. We didn't hold the 50, but neither did the sorry, my microphone stand just popped off my desk. Hold on one second here. There we go. The Dow. It's not like we're seeing money get out of the small caps and go into something else, right? So yeah, no, I think it's fine. JP Morgan. Oh, JP Morgan's going to get kicked off. Meta looks fine. Google and Meta communication services, great. We still have some strength in communication services, some strength in retail. We still have some strength in industrials. We're curious about financials. It's not here. Credit's holding up a little bit. We'll see. Microsoft still looks okay. Not great, but okay. Holding up. Micron. I think it still has more pullback to go. Netflix, sideways. Nvidia, it's kind of stalling on its attempt to launch. Picard, still holding up. I'd still be willing to trade it. PLTR, nope. Kind of sideways. QQQ, sideways, but above the 50. SMCI, above the 50. The S&P closing off the lows, but not by much, down 1.5%. I think TSM looks fine. It was kind of stalling, and then boom, it got enough to get up here. Not all the way up, but fine. So if it gives me a higher low above the 50, I'm in. VIX doesn't look great, but we're pretty well off the highs now, right? We're well off that 18. We'll see. Waste management. Still waiting to see if it's going to turn. Ooh, that could have caught some people right there. I was thinking about it. Just didn't want to put a new trade on in front of the CPI, and turned out to be a good thing to hold off on. Walmart, okay. Basic materials. Oh, yeah. No, that's not basic materials. It is. Basic materials all the way back down to the 50. That looks good. That looks good. We'd love to see that thing break on through the 50 and retrace. That'll be helpful. Communication services holding up. Looking for it to get near the 50 and catch a bounce. Energy pulling back. Great. Still looks bullish though. If this thing only pulls back to like 93, I think that we would all agree there's probably more of a bullish thought process than anything else. XLF. Come on, guys. You got to hold the 50 and you're not. Industrials are. I like industrials more than financials right now. Technology holding up. Not great, but holding up. Staples is down. That's not defensive. Utilities is down. That's not defensive. Healthcare way down, but also discretionary. Sideways, maybe down a little. Yeah, what's the thought? Patience. Patience. Be careful with what you hold. Be very specific about what new trades you're thinking about taking and what would cause you to look to take them. What's the schedule? Sunday, regular time, 11 a.m. Eastern, market posture. Monday, market open. Tuesday, calendar spreads, working session, application. Look, everything's fine. Is this like, hey, easy trading, throw money and it's making money? No. Is this manageable for us? Can we learn? Can we improve? Can we keep trading? Yes, that's what we're looking for. All right. Well, any last thoughts from anybody? Anything I needed to talk about that I didn't? Well, you guys are amazing. Hard day in the market. Here everybody is. I love that. I love that. I sometimes get a sense of resilience based on, what kind of attendance we have after a difficulty. I think this is the best day to come talk about it, process it, make sure we see it the same way, make sure we're not allowing biases to interfere with decisions. I feel like we're not. So, all right. Well, listen, everybody, I've got 73 degrees, beautiful weather. And there's a local nonprofit. It's this huge facility. One of the founders of WordPerfect bought all this land and it's turned it into, anyway, they have these gardens. It's a tulip festival. It's going to be amazing. Tulip festival, food trucks. What more could you ask for? Have a great weekend. I will see you guys in a couple of days in the morning. We'll have some coffee. We'll posture the market. We'll assess the damage and we'll prepare for next week. Thanks for coming out. It's good to see you. As always, happy trading.